tokenomics. If you haven't kept up, I'll just give you a key highlight. We've gone now to a hyper-deflationary tokenomics platform. What we've done is we've taken a majority of the tokens that we no longer needed out of circulation. We've burned them to a black hole wallet, and now here comes the magic. That black hole wallet will continue to earn reflections, and those will continue to compound, and that will continue to increase and take supply off of the market. We expect a supply shock as this increases and the burn wallet continues to compound. Right now, the burn wallet, as we started it, was 35%. It's gone to around 35.5% of the total supply in just 3 days. So it's rapidly adding up and compounding into that black hole, which no one can ever take the tokens out of. So once they're locked in there, they're permanently locked out of circulation. Another key highlight, we've done over 500,000 of buybacks with an average of 60,000 per buyback just this week. We're using those funds. In addition, we've added $375 of liquidity pool to the pancake swap side so that we can increase our size of the liquidity pool on the Binance Smart Chain side. We know that the pool size is about, let's say, 75% on ETH, 25% on PancakeSwap. But over time, we anticipate increasing volume on PancakeSwap. That's why we're adding liquidity over there. So buybacks, hyper-deflationary, LP additions, 11,000 holders. We're on our way. Now, talking about the farming treasury, because this really is the core, the heart, the utility of the project. The farming treasury currently is valued at around $12 million. We've taken in a majority of those funds from, obviously, the Ethereum as it comes in via the MCC token. It's put into the treasury fund, and there we bridge it into a variety of DeFi or decentralized finance investments. Now, I'm going to break down those investments tonight so that you guys can understand exactly where we're putting those funds. And when we look at how it's broken down, it's a few key areas. First, DeFi banks. This would be like Geist, Scream, Aave. These are very basic banks that allow you to deposit tokens, earn interest. And you can also borrow against those and basically get stable coins out of that, provided you manage the liquidation ratio. From DeFi banks, we're also invested in decentralized finance farms, specifically SpookySwap on Phantom and Curve on Phantom. In addition to that, we have the third prong, which we invest in, which is the high-yield DAOs, or decentralized autonomous organizations. Examples of that would be Ohm, Time, or Clima. So those are the three main types of investments. Now I'm going to go to a network breakdown so we understand where have those funds went in a multi-chain environment. And I'm also going to walk you through why we're choosing those specific chains. So the network breakdown. Of all the networks we have available to bridge to, we've experimented, we've played with a number of the following networks. We've centralized so far on Phantom, Avalanche, and Polygon. Those are the main three that we've focused on that are EVM compatible. What does that mean? That means that smart contracts that would work on Ethereum would similarly work on Phantom, Avalanche, and Polygon. Very simple for developers to get over there, port their DeFi stuff from Ethereum, and get over there and get it working. Simple, very simple. Nothing has to change. Now, in terms of how we've allocated these investments, Phantom is a majority. Now I'm going to go into why I chose that. And the number one reason Phantom is up there is because of the community. And I think that's the number one reason you're here tonight listening to me is the community of MCC. Now, the community of Phantom is so similar, but the way I look at it, it's really a community of developers investing and investors just really wanting Phantom to succeed. And Phantom is doing something a little bit different than the other guys. They are incentivizing devs or developers to come on and build on their network. They're saying, we'll give you a certain amount of Phantom per month if you come on and build. Now, that sounds a little different than what other networks are doing. Other networks are kind of more incentivizing users to go over there with incentives on Avalanche and Polygon. But Phantom, they're incentivizing the devs. And the reason I like that is because the devs bring the projects bring the users. That's how it works. It's as simple as that. And I know that Phantom can also scale. We've seen it scale to a ton of transactions. In areas where I've seen Polygon or Manic or Avalanche have a little bit of congestion issues, I've seen Phantom still hold up over that. So that's why a majority of the funds have been bridged to Phantom. And also, there's obviously Andre and a bunch of other well-respected DeFi folks are working over there, and it has just a ton of project, a ton of activity. In terms of the other allocations, we have about 5% on Avalanche with a primarily investment in time over there. And then on Polygon, we have about 2% of the funds invested in Aave and Klima DAO. We also have funds on Ethereum for obviously Ohm, which is on Ethereum, and Floki, which we've invested in, and a few funds on BSC as those come in from the farming wallet. As you can see the breakdown, it's around 9.7 million on Phantom, 1.1 million on Ethereum, 600K on Avalanche, and 300K on Polygon. Now, that really shows you the kind of multi-chain investments, and we're always looking out for what is the next chain. Is it ZK rollups? Is it something else? Is it another EVM compatible chain? We're always looking out there for what might be that next avenue from multi-chain capital. But right now, those are the major ones we're focusing on. Now, as we focus on those, I want to talk about how we look at the investments, what type of tokens and what type of farms we're looking at investing in. Three main strategies there. And these are paramount, I think, to providing safe and effective returns. So first, safe stablecoin returns. Second point is farming with little to no IL or impermanent loss. Now, I'll go into what impermanent loss is in a second, but I just want to highlight that we're trying to farm with little or no impermanent loss. And then thirdly, always compounding the returns where possible. If we earn a token and that token has significant value and we can stake it for more tokens, we're going to do that. Why not? We're going to increase our TVL, and as long as we continue in a bull market, those tokens will continue to increase and we can offload them at another time. So where we can, we're looking to compound those farming returns and keep increasing the treasury, which increases really what we can earn with this capital. So the number one key point of our farming strategy, and this gets back to something you guys have requested. In the beginning, we had around, I'd say 99% of the funds in ETH when we were trying to make this migration to version 3. Now that we're on version 3, we've focused heavily on rotating some of the funds into stable coins and then putting those in areas where we can earn a decent return. Here, we're looking for stable coins that are highly liquid and backed by assets or collateral. Put simply, not all stable coins are created equal. I mean, really, we just decided to focus on the three majors: USDC, DAI, USDT. We know there's others out there like UST, Magical Internet Money. Those are all other ones we're looking at and obviously allocating to and creating interest on. But right now, the big three are what we have. And we've put these all into interest-bearing or farming opportunities where the range of APY goes from 7% to around 20%. Now let's talk about where those stablecoins are right now. Stablecoin investments starting, we have in Scream, which is on Phantom and a fork of Compound. So Scream is basically a DeFi bank. We have 1.1 million in stables right now, earning an average of 7% APY. In addition to that APY, these also earn Scream tokens. This Scream token currently has a price of $24.50, and we can choose what we can do with these Scream tokens. We can convert them to USDC. We can keep them if we think they'll increase in value. But basically, it's additional earnings on top of that 7% APY. So that's Scream. Next up, stablecoin farming. Here, 3 different avenues we've gone with. And these, obviously, we've chosen to allocate to Curve, the biggest, because Curve has been around for a while. Curve is one of the standbys of DeFi or decentralized finance where you can swap stablecoins for very low slippage. So if you wanted to go from USDC to DAI, 100K of it, you could almost get 100K out on the other side. Very low slippage for swapping stablecoins or other pairs that really have the same relative value. So we have around 680,000 in stablecoins in Curve. Now, what does that earn? Every time someone trades on Curve on Phantom, we get a percentage of that fee, and that accumulates an additional stablecoin. But not only do we accumulate stablecoin, we put it in a gauge, and we earn Phantom and Curve. So there, we earn additional tokens on top of those stablecoins. So we earn Phantom, earn Curve, and we could stake those or put them in a DeFi bank or offload them into more stablecoins. And an interesting thing is now we also own, as multi-chain capital, we currently own 1% of the total Curve 2 pool on Phantom. So that's the whole DAI and USDC pool. So we're actively, I'd say, increasing the TVL or the total locked value of the Phantom chain. And we're actually holding not a significant portion, but a respectable portion of the Curve pool. So as we earn rewards there, we're also increasing liquidity on that chain. We believe this is a chain reaction. If we increase the TVL of that chain, get more users on Phantom, Phantom as a token will go up in price. And guess what? We have a lot of Phantom. We've invested in Phantom. We've allocated it, kept it in the bank. And so we're making a concentrated bet that more users will go to Phantom. And this is one of the reasons why we started this project. As I was going through this, I thought about if we can just get 1% of the people who look at this project to go and try out bridging, go and try out farming, go and try out the multi-chain experience for themselves and just get a little bit of experience in it, we believe those layer 2 networks will go up because users will go to them, right? So this is not only a token for investing, but we look at it as a community for learning. And that's what I'm trying to do as I walk through the investments, trying to help you understand our thought process on how we choose them, and also how you could use the similar thought process to choose them for yourself. So back to Spooky Swap, we have around 200K in Spooky Swap. Spooky Swap is like Pancake Swap or Uniswap, except for it's on Phantom. So they put it on Spooky Swap. Everything on Phantom kind of has a ghost or Phantom type theme, which is kind of cool. It kind of brings it all together. But back to what we're earning in Spooky Swap. So what we've done there is we've paired USDC and another stable coin, and we've basically put them into the Spooky Swap farm, which will earn us trading fees and rewards in Boo. Boo token, BOO. That's currently valued at $17.10 per token. And the APY for that farm currently is around 20%. It will fluctuate, though, depending on the price, obviously, of the Boo token as we receive it. But as we receive that Boo tokens, you can basically take them and stake them as XBoo for even more tokens. So this comes back to my theme earlier about talking about how we want to compound any earnings we receive whenever possible. So what we're going to do is take that BOO every time we earn those tokens and stake it for X BOO, which we can stake for more Phantom. It's amazing how you can kind of chain these things together. And obviously the earnings as you go down the line aren't really as significant, but we believe BOO as a token is going to continue to increase as value as more users go to SpookySwap. It's inevitable. If more people go there, that token will go up. So that's why we believe holding it will be the best investment right now until it gets to a level where we'd like to offload that for more stables, put that back in the farm, and continue to compound. So that's an overview of stablecoin farming. Now, focusing on farming assets with small to little IL, or impermanent loss. Now here I'm going to go into a little bit of detail on what is impermanent loss, because I believe it's kind of a mysterious or unrecognized thing in DeFi that many people, they see it, they're not quite sure what it is. Here is what it is. Impermanent loss is this. It happens when you put two assets in a farming pool, and then over time, the value of those assets change. So let's say you put in 1 BTC and 10,000 USDC in a pool. On day one, you'd have that same value, but as they trade back and forth, you might end up pulling out half a Bitcoin and 20,000 USDC. Now, is that a great example? No, but that shows you like the worst case example where the impermanent loss would be huge. And the impermanent loss really comes from the two tokens being different. Stablecoins really have no impermanent loss, or very little, because they're both valued at $1. They keep trading at $1, trading at $1. You just keep accumulating that position. But if you have two tokens with very different values that raise and lower at different times, you can get impermanent loss, which means what you put into the farm, you're not always going to get out when you pull it out. So that's why we're looking at investing in things that have basically the same value as each other. One way of doing that is stablecoins, that they're always worth $1, very simple. Other ways are looking at pegged assets. Now here's where we come to Tomb and Phantom. Tomb is a project on Phantom that pegs its price to Phantom. So they both remain relatively stable, reducing your impermanent loss. We have around 77,000 invested right now in that Phantom Tomb vault, and that currently is averaging 451% APY and already has earned over $15,000. And you can see if you check out the Medium, there's a really good, nice detailed screenshot coming from Reaper Farms, where basically they go over an overview of how much we've earned, how much we could earn in a year, month, day, everything like that. So just a bit of numbers or eye candy, if you will, to go over how we're earning in that Tomb crypt. And so that was farming, and we'll continue to look for farming investments as we evaluate. We're always looking on the lookout for what assets will have low IL, impermanent loss, and then looking to put those in an auto compounder or some other type of farm where we continue to compound those profits. So that's farming with two different tokens. And now finally, number 3, focusing on reinvesting and compounding the investments. So whenever we have the chance to compound or take a earned token, let's say we earned Curve and we earned Phantom, we will take those in and hold them, put them in the treasury, put them into Scream or another DeFi bank, and that way we can earn interest on those tokens and additionally grow our total value in the treasury. So anytime that we can earn that, and another example is BOO, as I went over before, if we earn the BOO, we take it, we stake it for additional tokens, and right now that BOO is actually earning additional Phantom. And we keep our BOO tokens. So really, There's no loss there unless we think that Boo will go down rapidly over time. And if you look at the chart for Boo, it's actually been pretty decent. Even though it is an inflationary token, it's given out as a farming reward. It does have a supply cap that they're heading towards. And Boo as a product or Spooky Swap is just smooth. If you guys have gotten on Phantom and played with it, if you compare your trade, just here's all you need to do. If you do a trade on ETH and on Uniswap, you pay $125 and you wait 5 minutes for it. That might be your experience. On Phantom, you do a trade for well under a cent, and you'd wait around 5 seconds for it. That's it. It's like a night and day experience. Now, obviously, liquidity over there can be improvements on Spooky Swap, but they're making them, So as we compare our experiences, that's just one thing I'd like to just recommend to you guys. If you've never played with this stuff before, you guys know the Ethereum experience. If you bridge over, just take a few funds, a small amount, bridge it over, and just play with it. And really, $100 will go very far on Phantom, whereas $100 you can eat up in a failed gas fee on Uniswap, right? So just if you really want to play with this stuff, all it's going to cost you is time. You really won't have to spend more than a couple $100 to really understand and even try some of these strategies out. So I really encourage you, obviously, to do that. And as you come across it, if you come across something new, we love your feedback. We'd love to hear about new opportunities. As you guys read through this, if you have another place we can earn a higher APY on stables, let's entertain it. Let's go for it, right? And one of our big, I would say, pillars that we're looking for is diversification. We don't want all our stables to be in one place. That's why we're putting some in Curve, some in Scream, some in Geist, basically distributing amongst protocols. That way, if anything goes wrong with any one of those protocols, we're not basically having the boat tip over, so to speak. We're having things distributed in different baskets so we can be comfortable when we sleep at night and know those investments aren't all in one bucket. Now, I'm going to talk about our high yield, high reward staking options. Now, these are mostly treasury-based DAOs. So that would be an example like Ohm or Time. And in return for you staking their token, you get an extremely high APY. And I'm talking above 1,000%. Specifically, as we talk through our investments, we have an investment in Ohm. Right now, the current rate of APY is around 5,000%. So we're actively earning Ohm there. On the Avalanche side, we're also invested in Wonderland Money, which is Daniel Atesta's project. Time is the ticker. And there we're talking around 67,000% in terms of what we earning in APY. So that we stake the token called Time and we earn more of it every rebase. Now, what is a rebase? A rebase, put simply in DeFi terms, is an increase or an adjustment in supply. What it means is every time that we keep our tokens in there for a period of time, they give us more tokens, right? That's how it's working. It's basically giving you more for what you have staked. And then over time, the utility and the value of those projects, we continue to see, especially with Time, we continue to see big moves there and how they're taking that project in new directions we think are very interesting in terms of what they're doing. Now, other investments that are high yield treasury-based DAOs are other Ohm forks on Phantom. And some of these come from your own community comments in the comment form. One of those was Hector DAO and Spartacus. We have positions in both of those. And basically, we can accumulate more tokens there by having the rebase. We don't have as a big of a position in those smaller Ohm forks, but we also recognize that the APY also tends to be a bit higher, considering that there might be a higher risk given that it's a kind of a not as established of a project. But still always taking your feedback into account. And if we see a certain thing come in, let's say 10 times on that community forum, we know there's got to be something there. It's not just one person saying, oh, yeah, please invest in this project. It's a bunch of people. And what we notice is communities. When communities come together and we see them advocating for a project, we know that's a strong investment because we know crypto runs on energy. Crypto runs on community. You don't have a project if you don't have a community. So basically, as we see people advocate for their investments, we know, do they have a good community? Do they have people actively, be a word of mouth talking about their investments? So we know as we look to the future, we always want you guys to have your input into this project. In addition to farming investments, stablecoin opportunities, whatever it may be, we have that community forum for you to fill in whatever suggestion it may be. We have our community managers, Altcoin Girl and Fomanachi, who are doing an amazing job in curating this stuff, taking your key questions and getting them to the right people in the right time so we can make the right choices and continue to improve the project. And now, getting into our final segment, frequently asked questions. So these questions come from you guys, the community forum. I'll go through them one by one, and always we plan to add to these as you guys add more questions over time. So number one, what is the process for treasury buybacks using farming profits? Answer, we will be bridging funds from the above farming investments back to the Ethereum network and then buying back MCC tokens to use for burning or liquidity pool additions. So you've seen the investments. I just talked about our investments as we've gone through them. As we accumulate and compound those, we'll bridge back the funds to the Ethereum network and buy back more MCC tokens. What does this do for you as the holder? It introduces additional scarcity or supply shock. As we buy the tokens, we take them off market and we either burn them or we can add them to the liquidity pool. Now that brings me to the second question. What's the plan for the MCC tokens that are bought back? Well, we have two options. There's really two key things we can do with them. Number one, we can add them to the liquidity pool by matching them with ETH or BNB. And in turn, our real use case there is to increase our volume. We know that if we increase the size of our liquidity pool, we can increase our volume because as we gather more users, the volume will go up. And this is a volume-based project. All projects really are. We live on volume, and we're trying to drive that volume up by actively increasing the LP size we have. Specifically, on the BSC side, we're actively adding to the LP pool to increase the size because we know it's smaller than the Ethereum size. And we know over time, we will gather a lot more retail users on the BSC side. Not to say that ETH isn't going to be the king. It always will be the king. But a lot of the people who are going to go jumping in, jumping out, jumping in of multi-chain capital are going to do it on the BSC side because the gas is just lower. And so that's why we're trying to build our LP or liquidity pool there so we can in turn increase that volume, which provides direct returns back to the treasury with that 5% tax. So that's the real key there. Right now, that's our preference as we acquire MCC. We're adding it back on the BSC side, matching it with BNB to increase the liquidity pool. Our second option is we can burn the tokens. We basically send them to the dead address, the black hole, and there it will increase the rate of burn or basically increase our already highly deflationary tokenomics. And so that would be our second option, or what we're going to enact once we're done adding to the liquidity pool. Once we get that to a really decent size, and we're talking, right now we're around maybe 2 million on the BNB side. We really like to double that, get to 4 million, 6 million if we can. That way we have a really deep pool, and we can enable high trading on both sides, BSC and Ethereum. Now, another question. What is the current circulating supply of MCC? And is it per chain or total? Well, we've got actually a great API from Moontography, from OK Let's Go, that they've enabled for us, that calculates the live MCC circulating supply. It does that by taking out the total supply and subtracting the burn wallet, the bridging wallet, and a few other wallets that are locked so that you can get the live circulating supply. And there's a link in the Medium. Right now, the supply is 2.22 trillion, and it's been counting down. If you keep refreshing that, you'll see it keeps counting down. The reason for that is more and more tokens are being burned off. They're being sent to that black hole, reducing the supply, and like we were talking about before, providing that really supply shock. When we see more buying pressure, there's not going to be a lot of supply there on the market. Another question, what about reflections? We know we have turbo reflections enabled. What about the Uniswap and PancakeSwap liquidity pools? Are those excluded from reflections? No. And the answer is because, and I'm saying this, if users decide to add liquidity to the pool, and I'm saying that if the user decides, we're not endorsing that or saying that that's the preferred thing, but if they decide to, we want to be sure that it can receive their reflections. So that's why we have that enabled for the pool. Next up, what is the progress with the Surtec audit? Well, the great news is we just got back the initial comments today. I'm going through the PDF. The great thing is there's no major issues, no critical issues that we have to take care of. So we're going to have that turned around, take care of any minor comments they had, and turn that report around relatively soon. And obviously already we have the Solidity Finance audit, which is active and with 100% pass. And the great news is the Surtec audit came back with the same really results as Solidity. So that's great to see both audits coming up in the same form. And then finally, to our final question, what is the plan for future marketing? Now, I know this is a huge one because marketing is how we reach more people. It's how we grow this project. And it's how we get really this project into the top 100, right, is marketing. That's how we're going to take it. So we got a number of plays that we're going to choose from in terms of picking really the best playbook. And we're going to get them done as quickly as possible, but with a focus on quality. Remember, we've refocused the project now with the additional investments we made on development, having additional advisors. And I'll say this again, we like to go a little slower to go fast. And what I mean by that is we take our time to look at a quality job of what we're going to do. We make sure we can do that job, and then we put it into action. And you saw that with the migration into version 3. We told you what we were going to do. We did it, and we got it done. And so, likewise with marketing, we have a number of high-level key advisors on the team who have a track record of success with multiple projects. They have a playbook. We're going to take the best parts of that playbook and use that for our future success. You've seen other projects that have gone from hundreds of millions to the billions. That's the direction we're headed with multi-chain capital. And with that, I'd like to thank you all for spending your evening here with me tonight, or wherever you are in the world. I also like to take the time to hope that you guys enjoy whatever holidays you may have coming up. Obviously, spending time with others, family, friends is important. So make sure crypto is obviously not the one and only thing you do on your vacation. And otherwise, I'd like to say to the Reflectors Nation, thank you for being such a huge part of this project and community. Your input, everything that you basically have been providing in terms of directing the project has been invaluable. You guys are the direction on how we take this. And I'd like to encourage you as you guys continue, just keep speaking up and we'll continue to take this project to the next level. Thank you. Reflectors Nation, we'll talk soon. Take care.